and welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, the 20th of October. We're recording a little bit late today because we've just watched the resignation of the Prime Minister, haven't we, Phil?
Gosh, Andrew, yes, we have. And who is next? I was thinking to myself, do you know what? If company chief executives and whole-scale boards of directors changed this often, you would question buying the shares.
You wouldn't touch them. Look, she lasted 44 days. I suppose that was longer than Kwasi Kwarteng. I mean, it was a bizarre week. We started the week with a mini budget, so to speak, from Jeremy Hunt, where he came in as the fourth Chancellor in 4 months. He reversed everything. Now we're changing the Prime Minister. We lost yesterday, didn't we? We lost the Home Secretary. And I'm going to just put you on the spot a little bit here because I love doing this to you, Phil. But can you name who the Home Secretary was?
Suella Braverman.
Well done.
Thanks for, she came after Priti Patel.
I know. Well, I just get so confused. I can't name half the bloody cabinet because it changes so rapidly. I don't know where we go from this. I mean, Robert Peston's going to have a field, though, isn't he? And I mean, the trouble is, I've been getting WhatsApps, Phil, from people overseas that I know, just going, what the bloody hell's going on? And how can anybody, you know, on a large scale, look at making investments into the UK when you just don't know what's going to be happening? I mean, there's no credibility at all. It's so embarrassing. I'm embarrassed. I don't know about you.
Well, it is. Look, I was looking. You think Margaret Thatcher was in for over 11 years, Tony Blair was in for over 10 years, and now this. And like, I mean, that classic point of if you were changing your whole scale board of directors this often, would you invest? And it is such a big issue for us now in terms of foreign direct investment. Confidence.
Well, that's what Liz Truss is doing now. I think selling the big issue.
Yes, exactly. Well, she will get a handsome pension and police protection from it anyway for a very short tenure. I
mean, the interesting thing is, we are literally doing this just after Liz Truss resigned, but the markets have so far remained remarkably calm, which tells you, in my view, one or two things. Either the markets are so international that, frankly, who's running this country doesn't bother them at all. I could tell you that they think, well, actually having no prime minister is better than having one. I may just tell you, maybe they'll get it right this time. Maybe they'll actually get a prime minister. And, I don't know, will a new prime minister mean that we'll have a new chancellor? Now, if we have a new chancellor, I think my money is on Mr. Bean.
We discussed Mr. Bean because he wouldn't be saying anything out of turn that would upset the markets, would he?
No, I think Mr. Bean would be an excellent chancellor.
Yeah, but he's not on the unfortunately on the Betfair list of odds at the moment, which I was just looking at.
Oh yeah, what are the odds then?
To see who's Sunak's favourite, followed by, I'll get this right, followed by Penny Mordaunt, and then followed by Ben Wallace, I think. So there you are.
I mean, we don't actually know yet, do we, how they're going to do this wretched revote. God, I mean, I despair. I really do despair. I mean, it's terrible, isn't it? Sorry, this is a Tech and Trans podcast, I know, but I can't help but despair, which is sad.
It's world's sixth biggest economy, and we've ended up like this. Bloody hell! I hope they sort it.
Yeah. Anyway, okay. Well, look, let's. In the meantime, I'll be absolutely honest with you. In the meantime, I've just quickly pulled up the odds. Funny enough, on Paddy Power. You're right. Rishi Sunak 4-6 on, Penny Mordaunt 9-4, Ben Wallace 17-2, Boris Johnson 14-1. He must be having a hell of a laugh. Anyway, there we go. Let's go back onto tech and trans, shall we? I'll be honest with you, I've had a very busy week this week, Phil, and I really haven't had much time to look at an awful lot. Although there have been one or two big picture announcements. There was a big announcement coming out of the US on the fact they've now spent $2.8 billion out of their infrastructure reform act or whatever fund I don't mean that. Do I mean 2.8 billion? I do, don't I?
Yeah, you do. Yeah.
And it's all going into the battery space and everything. I mean, they're really starting to pour the money in there, aren't they? I mean, they have woken up to the fact of what's going on in China, I think, and are competing now. And what we need, of course, is Europe to do the same thing.
Yeah, it's called a strategic direction, which we've not got. And what was amazing about this as well, you could tell, by God, you can see how they've thought this through. $2.8 billion so far awarded to 20 companies. Very, very focused approach to the whole thing, and a strategic approach. And you're right, they are waking up to it. Oh, for sure.
Yeah, I mean, I'm told the sort of minimum ticket size is $100 million.
Well,
we don't have that at VSA. We'll take anything.
No, we can't until after that. So yes, that was quite big news. But Tesla, of course, was very interesting for the electrification space. And I don't know. I look at this and you think what a gigantic company has been built over a relatively short space of time. The third quarter results, their earnings per share. What have they got? They got 21.45 billion of revenue, and analysts were looking for 22.09. Oh dear, ever such a slight miss, but not a lot. And the earnings came in at $1.05 versus consensus of $1.01. But what was interesting for me was the bit on the gross margins here, and this is automotive for you. It's not quite making the gross margins that software does. Gross margin of 27.9%, slightly below the 28.4%, and it was due to elevated costs on materials and labour. Well, you know what? That's not too much of a dent, all things considered. So
I'd agree with you, actually. I mean, I think the numbers are huge. I mean, the turnover is massive.
That's nothing. Oh, this is a company created, I don't know, 10 years ago? But wow. Quite amazing. On the subject, fortunately, of Taiwan and semiconductors and what's happening strategically, ASML, who are Holland-based, one of the biggest equipment suppliers into the semiconductor industry. They supply what's called lithography equipment for etching circuits, but used by all the global manufacturers, including TSMC in Taiwan, Samsung, and Intel. But they just reported their third quarterly sales and profits. And they've said they've got record bookings. Now, this is interesting because this is at a time when we're seeing the computer industry, which is a big consumer of chips, kind of slowing down, or some elements of the PC market, for instance. But they've got a good outlook, and they're actually saying this is due to companies, they're investing in a longer term view. So it's back to our little theme of capital spend and what is happening. So it's customers expanding long-term capacity. Now we had IBM, Andrew, which you mentioned this morning. They reported again its third quarter results. Their revenue was, I'm just looking at this, up by I think 6%. Oh no, the share price was up 6%, but the revenue increased to 14.1 versus 13.5 expected by analysts. But they said that they'd seen something. This is for all companies, must be watching this like a hawk. Companies said that foreign exchange rates would result in 7% less revenue than otherwise. But for me, what was interesting in all of this was the fact that they'd seen 7.5% growth in their software business. So companies still investing in IBM software, on the consultancy business, and this can be something that goes soft in a softer economic climate. Their consultancy business was up 5.5%, which I thought was very interesting as well. And then of course they've got their mainframe computing business, and that was up by 14%. So companies spending on capital there with them, spending on software, spending on consultancy. Interesting one.
I mean, it's interesting, the things we've said so far. I'm going to go off on a little bit of a red herring, as I do occasionally, is that I think, in the 40 years that I've now nearly done in the city, we've basically had 40 years of boom time where we've seen a steady decline in interest rates, steady decline in inflation, been the old blip, shall we say. And there's been an amazing environment for bonds and equities, actually. And you can't help but feel that what's taken place over the last 40 years has now changed, and we're moving into a new era be it 20 years or 40 years, I don't know, where very different driving forces are going to make up your investment mind. Obviously, we've got the Cold War too, as I call it, where certainly, as we talked about earlier, America is realizing they've got to start bringing production and everything back to the USA. The rest of the West has got to wake up to that. There is going to be this, East versus West, who does it. But the other thing is that, debt over the last certainly 14 years has got out of control, and it's sort of been topped with a layer of icing, which was things like, furlough and energy bailouts and you name it. And everyone now feels, and this is obviously what this trust has gone wrong, is that the debt levels are just too high and we've got to get rid of them. Now, the one bit that people don't talk about in government is actually there's really only one way to get rid of debt when you're governments, and that is actually inflation. Inflation brings your debt down because you inflate everything else, and so relatively debt comes down. That certainly injects your GDP. Now, the secret with inflation is that when it hits, 10.1% as it did on whatever day it was this week when they announced the new inflation numbers, everybody gets very upset and inflation's too high, and the unions all come out and say, we want inflation matching, pay rises, etc., etc., etc. So 10% is too high. People don't like it. But, down actually at 2%, which was the Bank of England's target, is too low because you don't deflate out your debt. So what we actually need to do is go back to a world, or set up a world where probably inflation is running at about 5%, because then it's, most people can cope with that. They're not really going to notice. They're not going to complain. But actually, if you have 5% inflation, it doesn't take that many years until your debt is no longer a problem. So I think the government needs to tell the Bank of England to reset its target and to aim for sort of 5% inflation, which probably means you're going to get interest rates at about 5% to try and match it. Now, if you happen to agree with this sort of view that I'm having, the one thing you don't want is bonds. Now, the one thing, of course, that's happened over the last 40 years is that all the big pension funds have basically moved away from equities and got into bonds. So the funny thing is, although you may say, how does that help equities? The good news is that if all the big pension funds are going to start moving out of bonds, there's a fair chance they'll allocate more money to equities. But the other thing you're going to see to allow this inflation, etc., to go on, and with the Cold War going on, is you will, I think, see a capex boom in certain sectors, as you were just describing there, pushed by things like the Inflation Reduction Act, pushed by the need to bring things back to the West from the East. And so I think sectors that are involved in tech and transitional energy in particular, but also climate change and that sort of thing, actually the outlook for them is really, really good in this new environment.
But do you know what? I was wondering now, commenting on IBM, but I agree. I have to say I do agree with your view. And the structural growth angles because of that, because there's another factor in here as well on tech, and it's productivity. Being able to drive the great UK conundrum. How the hell do we increase our productivity and have higher value jobs, higher value exports? It's productivity, and I guess for technology that is a big driver.
Anyway, that was my little red herring. So we love a red herring. Back to things you've seen this week, Phil.
Yeah, but that was it might seem like a red herring, but we're always looking at structural and long-term growth drivers. So I think it's very, very, very relevant. Okay, talking about the markets and talking about tech and valuations, I did see here that Intel, who'd acquired Mobileye technology, this is for, I can't remember what it's for actually. Yes, self-driving tech. So this is sort of scanning tech, sits on top of the car, spots where it is, spots its location, what's around. Mobileye, but looking to IPO, and the room's on the market that's seeking a valuation of $16 billion, less than a third what would have been expected. How the markets have softened, but remember, things like IPOs, big tech IPOs, you've always got that element of uncertainty on the growth rate at the moment. But that was quite eye-catching. But there's been a bit of news out from some of our smaller companies quoted in the UK. And let's cover off one of those quickly. Centralnik, ticker CNIC at 378 million. Not that small, but they got their software platform is particularly focused on managing domain names. And these are for websites right across the e-environment, as it were, but managing domain names and email, but in particular protecting brands. And domain names are sort of intrinsically tied up with that. But they've said that they did a 9 months trading update, positive trading momentum, saying they're expecting revenue of net revenue at least 127 million, adjusted EBITDA of 61 million, so high margin there, but we'd always look at cash flow, of course. But what they did say is that their cash had increased to 83 million from 56 million. So stuff is converted to cash. That's excellent. And they have said they now have confidence that the group will materially exceed the current market expectations for the full year. So that's very positive. That's from Centralnik.
We love somebody who says they can exceed expectations. We like that.
Well, there you go. And another company, and this one has been around for ever since I came in the city, is IQE. I think ticker's IQE, 330 million market cap, and they manufacture compound semiconductor wafers. Well, basically, it's silicon chip wafer. It's the wafers that have the chips on, but their compound semiconductors are a little bit different from the silicon chip, microprocessors in your iPhone. These ones go in and they're used to transmit and handle power. So the radio frequency signal that comes out of your iPhone, smartphones, but they also produce, these chips are used for very, very small lasers called vertical cavity surface emitting lasers. There you go, VCSELs. And so things like your Face ID recognition on your iPhone uses a VCSEL. In fact, the iPhone X was the first to use it. Anyway, they've announced that they have signed a multi-year strategic agreement with a global consumer electronics OEM in Asia. So it's going to be a big one, I'm sure. They're not quantified the announcement yet, but I'm sure that is quite good news for IQE.
Well done them. I would like them to make some photo recognition of my iPhone when I'm wearing a bicycle helmet, because at the moment it doesn't work when you've got your bicycle helmet on. It's really annoying.
Oh, didn't know that. Oh, there we go. You've got to write to. You need to write to Apple. On the subject of consumer electronics, Nanoco, which we have talked about before, Andrew. The ticker
the
is
litigation stock.
Actually, you have to say a little bit more to that. But yes, the litigation is involved. The ticker's NANO, 100 million market cap. The full-year results. And they produce cadmium-free quantum dots. Oh God, this is a tricky technology, but basically quantum dots are used in very, very high resolution TV displays. So if you go walk around John Lewis and look at their latest display tech, I'm sure there are Asian consumer manufacturers that will be using some sort of quantum dot technology. And they've sent the full-year results. They're continuing to work with a major Asia chemicals customer. So that's no surprising. They're consolidating their operations to save on costs, because their results, the turnover was just over 2 million, I think, and a loss of 2 million. But the company has 6.8 million in cash and a low burn rate. But onto the litigation, and it's litigation with Samsung. And this is a patent trial and appeal board confirming the validity of 5 of their patents and 47 associated claims, but there's a jury trial in Texas expected short term. They filed an additional lawsuit. I think this is Nanoco filed a lawsuit injunction against Samsung in Germany. So an interesting one on investment, and the share price has been running up. You will see. So
but it's been going on for years.
Yeah, exactly.
Years.
So
maybe one day they'll resolve it. It's crazy.
Yeah, but if they've got the cash to keep seeing them through and they're winning business, then they're obviously managing the situation a bit.
Cash is king. Yeah. All right. Moving on. What else?
Right. Sayeta. Which
yes. And I was fooled by this. I didn't think it was I thought it was a bit of a cautious statement. The stock went up.
Well, let me explain. I can never pronounce this correctly, but it's spelled SAIETTA, and the ticket is SED. Just
You
under
got it
100
right.
million
It's
market cap.
Scietta. You got it absolutely right.
Scietta. Oh, well, thank you very much, Andrew, for that. This is an electric motor technology company. And they signed and sort of raised funds in August. And they've got a 20 million euro major joint development program with Consolidated Metco in the States. And this is they're planning to develop and market a patented range of in-wheel e-drive and generator products for trucks and buses. These are really, I've looked at these things. They're like called e-axle technology. It's where you've got the motor and the inverter and the controls are all together in one axle. And the trucks and buses are seen as serious markets for that tech. But the statement went on to say all the progress that we're making with that. But they then went on to say that because they were now focusing on far bigger projects, that they're expecting the revenue profile across the year to move more into a second half concentration. I think that's about right. So it was like kind of all bullish news, but by the way, we're going to see that.
I didn't like that ending. I thought it was a bit. I thought that was a bit of a disguise. Ooh, it could get pretty hairy, scary. The market did initially like it. Actually, in fairness, the market sort of changed its tune now. I mean, this stock was trading up as high as sort of 260p. It's now down at 94p, 92p. It's a tough space. I mean, they've gone from tuk-tuks to lorries.
Very different type of engineering, but it's a big potential market. I mean, we were looking at this early in the week, weren't we? And we were talking about hydrogen and hydrogen refueling.
We sort of spotted that Shell are pulling out of it, aren't they? I mean, well, they're pulling out of the small end, aren't they? They're going to take away all their hydrogen refueling for cars, and then they're going to focus more on the big heavy truck market.
Yeah, and if you look at where the development dollars are being spent, it's all the heavy truck makers are working. I mean, Daimler's the biggest, and they're working on hydrogen trucks because the need's different, isn't it? I mean, the weight of the batteries that will be required to propel a truck versus the weight of batteries for a car, which is not being paid necessarily to carry heavy loads. The economics are different. Hydrogen is seen as a good, a clean, more economical solution for the truck industry, and hence the truck industry is putting the money into hydrogen.
No, I think you're right. Different modes of transport need different solutions. Again, another red herring for me today. But as I was saying to somebody, I think Phil, I recently got a new bike. My old one was 45 years old, kept breaking down. No, I love my old bike. But everyone said, get a cycle to work scheme bike out. It'll cost you half price. You won't even notice the difference. So I got this new bike. Yeah. And the guy at the loading bay, when I was taking it down to the bike room, said, why have you bought a flash sort of, lightweight, carbon fiber bike? Why have you gone for another boring steel bike? And as I pointed out to him, the thing about a bike is, right, it's not about the weight of the frame and everything, because the heaviest thing on my bike by miles is me. Whether I have a steel frame,
overly heavy, Andrew, but yes,
but I am by miles. The key to a bike is the tyres you've got, and I did change the tyres that I like that make it a lot easier. Anyway, that's another complete red herring. Just telling everybody how fat I am at the moment. Back to tech and transitional energy. Sorry, Phil. We've done hydrogen. Shell are changing the game for the truck market. Right, that's it. Done. Move on.
Right. Well, no, that is for me. That is about it this week, actually.
Oh, right.
In terms of news, but pleased to see you're maintaining your capital expenditure. And we will be looking out for, as I say, a lot of the US results are now coming through for the third quarter, and what their outlook is, and particularly in the tech sector. So we'll be following that quite closely. But apart from that, in terms of the markets, I don't think there was anything.
No, I mean, there's been a lot of trading updates across the whole sort of market, actually, but most of them are sort of in line. And so, to be honest, you aren't that exciting. And things like GB Group, which we've talked about in the past, because they've had a bid, they came out trading upstate, remains unchanged full year. We've had things like that, RPS in line, it was all been in line. So really pretty boring. The only other thing I would point out is that I've got some possible bad news for the Bitcoin price. because I don't know if you've noticed over the last few years, but basically the Bitcoin price has been following pretty closely the avocado price. And I don't know if you've noticed, but in the last few weeks, the price of avocados has absolutely collapsed. So that looks bearish for Bitcoin.
You know what? I didn't know that was a currency pairing. Well,
there you go. You learn new things every day, Phil.
I'm always looking at the the GBP versus the USD.
I will send you a chart after this, which plots the price of Bitcoin against the price of avocados. But yeah, believe it or not, the price of avocados has absolutely collapsed actually in the last sort of 3 months, and has collapsed pretty badly in the last few weeks. It's very healthy food as well. So go out and buy your avocados now. And on that note, I think we call it a day, because people think I've gone completely mad today. I've just been overworking, I think. So anyway, look, I hope everyone enjoyed it. If you disagree with me, if you think that the Bitcoin and avocado price don't actually match each other, just let us know. If you feel we've upset you, let us know. Tell us what to talk about. No one ever sort of, we need to have somebody to, come up with an opinion. Tell us, hey, how about this? Or if you want to be a special guest, ring us up and say, I want to be a special guest on your podcast. I want to come and give my views. We'll do that too. Anyway, on that note, I'll wrap up and shut up for a while, and we'll be back again next week. Thanks.
We certainly will. Take care. Cheers, Andrew.